Hello everyone, today we are going to tackle one of the most critical yet often overlooked aspects of running a successful tax practice. That is, billing your time during busy season. Tax season is intense. You're juggling multiple clients, racing against deadlines, and handling last-minute emergencies. In this chaos, it is incredibly easy to lose track of billable hours, and that directly impacts your profitability. Today, I'll share some practices and strategies that will help you track your time efficiently, balance competing demands, and ensure you're billing accurately for every hour you work. Let's start by acknowledging the reality we all face during tax season. You're working around 50 to 70 hours a week with simultaneous client deadlines. You're constantly switching between returns, and emergency requests disrupt your workflow throughout the day. This creates serious billing complications. You'll lose billable hours in this chaos. Time entry becomes inconsistent, and scope creep eats away at your profit. And billing disputes with clients will increase. Here's the stark reality. Tax professionals lose an average of 15 to 20% of billable hours due to poor time tracking during busy season. For a firm billing $200,000 during tax season, that's $30,000 to $40,000 walking right out the door. Not because you didn't do the work, but because you didn't capture it. And that's what we're here to fix today. Strategy 1 is implementing real-time tracking systems. And the golden rule is simple: track immediately. Never rely on memory during tax season. Your best practice is to set up hotkey timers for frequent tasks, like F3 for client communication. One keystroke starts your timer instantly. The productivity tools on the right make this seamless. Practice management software streamlines administrative tasks. Desk time timer widgets track time on different activities for better focus. Mobile time tracking apps offer flexibility for time tracking on the go, and calendar integration tools organize appointments and deadlines for effective time management. The impact is dramatic. You could save 45 minutes every single day, 92% accuracy increase, and you could recover over $12,000 per season. That is the power of real-time tracking. Strategy 2 is smart task categorization, one of the most powerful tools for accurate billing. Not all work is created equal, and you need to track it accordingly. Your time tracking should capture 6 key categories: administrative tasks, document management, return preparation, research for complex tax issues, client communication, and review and quality control. This is important for client transparency. Detailed invoices showing work by category reduce disputes and help to build trust. When clients see exactly what you did, they understand the value. It's also important for revenue analysis. Categorization reveals your most and least profitable services. You might discover that research work is highly profitable, while administrative tasks are eating up your margin. Finally, staff efficiency. Breaking down where time goes helps identify bottlenecks and training needs. The bottom line is you cannot manage what you do not measure. Smart categorization transforms time tracking from a billing requirement into strategic business intelligence that drives profitability. Strategy 3 is batch time entry using the 242 method. This simple routine prevents lost billable hours, and here's how it works. At around 10 a.m., log the previous evening's work while it's still fresh in your memory. Then around 2, you'll capture your morning's work activities before they fade. And around 6 p.m., complete your final afternoon entries. This 3 times daily discipline takes only 5 minutes per checkpoint, but captures hours of work otherwise forgotten. To support this habit, use 4 techniques. First, block time entry slots on your calendar as automatic reminders. Keep a notepad handy for quick task notes throughout the day, and set your phone alarms for your checkpoint times. Finally, you'll review your email sent folder, as it is a treasure trove for triggering memories of completed tasks. The 242 method transforms time tracking from an overwhelming end-of-day burden into manageable micro habits that protect your revenue. Strategy 4 addresses the juggling act of managing multiple clients simultaneously using a client matrix system. Organize clients into 4 priority levels. P1 critical clients have deadlines due within 48 hours. Work on these in the morning as soon as you get into the office. P2 clients are urgent. They have deadlines due within 1 week. You'll work on these next till around noon. Now your P3 are your standard clients. They have deadlines due within 2 weeks or more. You'll work on these around the late afternoon. And P4 are your extension clients. They'll fall in October, so get scheduled separately outside of peak season. Here's a pro tip. Use separate timers for each client to ensure all time tracks properly. When you switch from one client to another, stop one timer and start the next. This prevents the common mistake of working on 3 clients but only billing 1. This matrix system transforms chaos into clarity and ensures no billable time slips through the cracks. Strategy 5 establishes clear policies for extensions and last-minute requests, because not all deadlines deserve the same rate. Your rush fee structure should be tiered. Let's say within 72 hours of a deadline, add a 25% premium. Within 48 hours, 50%, and within 24, I would add a 75 to 100% premium. This isn't gouging, it is just fair compensation for disrupting your workflow and working under extreme pressure. For extension strategy, file early by March to set internal deadlines of September 15th. Spread the workload across the summer and track extension clients separately so you can analyze their profitability. Your emergency protocol requires an upfront retainer getting all documents digitally immediately, scheduling dedicated time blocks, and documenting every interaction. At the bottom of your communication script for rush requests, notice the language, "We can absolutely help with this rush request. Due to the compressed timeline, your rush fee is blank % above our standard rate." This ensures we can dedicate the focus time needed to complete your return accurately. This approach sets boundaries while maintaining client relationships. Let's make this actionable. Here's your implementation roadmap with 3 key milestones. This week, you'll choose and implement your time tracking software, create your task categories based on the 6 categories we discussed, and set up reminders for your daily time entry checkpoints. This month, you'll want to establish your rush fees and client priorities so everyone knows the rules. Train your team on the new systems and expectations. This is critical. Your staff needs to understand why this matters and how to do it correctly. Before next season, analyze your data from this implementation period. Update your rates based on what you've learned about profitability. And revise your client engagement letters to reflect your new policies and fee structures. Every unbilled hour is revenue lost. Make time tracking a non-negotiable habit, not an afterthought. The difference between a profitable tax season and a stressful, underpaid one is often coming down to a single discipline. Start today, and your future self will thank you later. Let's bring this all together. Today, we covered a complete journey, from challenges to strategic approaches to implementation and planning. We started by acknowledging the challenges of the 70-hour work week, the simultaneous deadlines, and the reality that poor time tracking costs you 15 to 20% of your revenue every tax season. Then, we explored strategic approaches to solve these problems. We talked about real-time tracking systems and smart task categorization, along with the 2-4-2 method and a few others. Finally, we discussed a concrete action plan, steps that you can start implementing this week. Here are your key takeaways. Record time daily for accurate time tracking. This is non-negotiable. Use dedicated software to improve accuracy. Memory does not cut it during tax season. Employ project management tools for client coordination. Organization is profitability. and communicate premium rates for rush or extended work. Your compressed timeline has value. The firms that are thriving during tax season aren't working harder than you, they're working smarter than you with better systems. You now have the roadmap to join them. Thank you.